Sarah, what are your clients telling you at the moment? Are they very bullish still, getting a little bit more cautious? And how's it informing how you should be positioned?
So what's interesting is that clients of our team, as the market has just continued to move higher, really since the bottom of March of 2020, we haven't seen a 5% pullback since last October. Over the past 9 decades, there really have only been a dozen or so instances of such come. They're taking that and they're actually becoming a little bit more aggressive and willing to take on more risk. So that's when we have to step in and almost say, you know what, we have to make sure that your portfolio is still aligned with your risk tolerance. It's great that the stock market has continued to run over the past year and a half or so, but it's almost as if clients feel as if the stock market only goes up. But in reality, we all know volatility is normal. As Mike just mentioned, we are entering a period with weak seasonality, and we have to make sure that clients are prepared for whatever might come their way, and not just the rest of the year, but in the years ahead as well.
Sarah, if I can follow up with you, as you are preparing your clients and you look at the numbers from today's jobs report, we spoke about this a bit earlier in the show, and I want to make sure to get your take on it. Is there anything in there to you that feels a little foreboding? The markets, for the most part, kind of shook it off. Yes, we ended the day lower, but really only marginally so. Are you worried that this suggests a further economic weakening is coming? Keith wasn't so worried that that is the case here, but what do you tell your clients?
The short answer is I'd probably be on the same side as Keith. Looking at the data this morning, there's no doubt that it was disappointing. No one wanted to see that. We did see the Delta effect. There were a few slight silver linings. We saw revisions from the prior months. We also saw the unemployment rate continue to tick down. But as you said, we really didn't see too much reaction in the stock market. When it comes to allocation and portfolios, it's very important not to overreact to any one data point, just like the market didn't react to any one data point. So we're not too concerned at this point. We still do believe that the economic recovery is on track. And as it relates to what that means for the Federal Reserve, well, the Fed and Powell have made it very, very, very clear that they are data dependent. They are going to be paying very close attention to the jobs market, even more so than inflation probably. So no doubt the September meeting will be a very interesting one to hear their comments. But we can't take too much away from just this month. We'll have to see what the months ahead look like as well.